Коллеги, спасибо.
Colleagues, thank you. Thank you very much. Good afternoon. We're happy to see you here at the Bank of Russia. We are beginning the press conference by the Governor of the Bank of Russia, Elvira Nabiullina, where we will first hear the statement based on the results of the Board of Directors meetings. Good afternoon. Today, the Board of Directors has decided to cut the key rate by 25 basis points to 6% per annum. We hold out the prospect of key rate reduction at the upcoming meetings if the situation develops in accordance with our baseline forecast. When taking our decision today, we took into account a wide range of factors. First, inflation dynamics. In January, annual inflation declined to 2.4%. Let me remind you that it was 3% by the end of 2019. The inflation slowed down itself versus the December reading was expected and was mainly related to the factoring out of the VAT rate hike from the calculations last year. However, inflation slowed down at a more considerable pace decline than we had expected. This seasonally adjusted monthly inflation rate also indicates a low inflationary pressure. Core inflation and other stable price dynamics indicators are close to 3% or lower in annual terms. We expect that in the first quarter, annual inflation will reach about 2%. In the middle of the year, it will begin to rise, gradually returning to the target. We maintain our inflation forecast for 2020 at 3.54%. Now let me speak about the drivers behind current inflation dynamics and why we think that it will return to the target. Economist demand. Although we recorded an increase in domestic demand in the second half of the last year, external demand remained quite subdued. Among other things, this resulted in a decline in Russian exports. That said, the dynamics of domestic demand in 2019 were very irregular. Weak demand in the first half of the year led to a fast inflation slowdown to the current low level. The revival in domestic demand in the second half of 2019 and its further expansion this year will become the main driver behind the return to inflation to the target. Both consumer and public demand has improved. Private consumption growth was driven by increasing real wages and disposable income, including due to falling inflation. The end of the last year also saw a rise in public expenditures and a more extensive usage of funds to implement national projects. In our opinion, these trends will continue this year. I think it's important to particularly note the following. From 2015 to 2019, the macroeconomic policy, both monetary and fiscal, was largely determined by the necessity to adapt our economy to the dramatic changes in external conditions that took place in 2014, by the need to increase macroeconomic stability, price stability, and fiscal sustainability, to lower the dependency of the economy on the situation in commodity markets and geopolitical risks. As of today, this goal has been largely accomplished. The period of adaptation has ended, budget consolidation has completed, and there is even some space for the accommodative fiscal policy. Annual inflation has reached the target, and since 2017 has averaged 3.7%. It was already last autumn that we completed the transition from a moderately tight to neutral monetary policy. We cannot afford treating the last 5 years' achievements recklessly. These achievements have established a foundation to implement an effective counter-cyclical economic policy. It is important to note that the effect of the fiscal and monetary policies will largely depend on the behavior and sentiment of private businesses and households. It will depend on their response to the decline in interest rates, their use of additional income, whether they will save or spend it, and on whether private investment will grow in response to the budgetary impulse. And this, in turn, depends heavily on the sentiment of producers and consumers, their confidence in the future, their investment horizon, personal plans, and the business climate in general. If the sentiment remains cautious, moderate, both fiscal and monetary policy measures will only have a limited effect on the expansion of aggregate demand and sustainable economic growth. Back to the current situation. Exchange rate dynamics are yet another driver behind the deviation of inflation from the target and subsequent return to it. Last year, the ruble significantly appreciated, and today we still see the accumulated effect of this appreciation. Even with the January fluctuations factored in, the ruble remains stronger than in the previous year. In the first half of the year, the effect of the last year's appreciation and its disinflationary influence will be exhausted. Food markets. We are observing price dynamics that are not typical for this time of the year. Seasonally adjusted, food prices have basically remained at the same level for several months without growth. The supply factor and the successful developments of our agricultural sector play an important role here. It is difficult to estimate the proportion of temporary and persistent factors in the food market reliably. These remain a potential for further production growth and capacity expansion. At the same time, this sector's export capabilities are also expanding. Production growth leads to increased competition. We base our view on the fact that this will gradually result in the aligning of food price dynamics with those of other goods and services. Inflation expectations. No significant changes have been observed here in the recent months. Over the one-year horizon, analysts' expectations are forming close to 4%. Short-term price expectations of businesses have stabilized at an all-time low levels. Households' inflation expectations are currently holding close to the two-year minimum. However, we continue to estimate this level has increased. The main thing is that we are yet to estimate the anchoring of inflation expectation of both households and businesses when the slowdown in inflation ends and it returns to the target. Economic growth dynamics are the second most important factor behind our decision besides inflation. In 2019, GDP grew by 1.3%, which is the upper bound of our forecast range. Internal consumption growth slightly overshoot our expectations, whereas external demand was weaker. As I have already noted, the growth of demand and the economic activity indicators occurred in the second half of the last year, including owing to the accelerated budget execution. The Board of Directors retained almost the same view for 2020 and medium-term forecast at this meeting, unchanged. This year, economic growth will exceed the last year's reading and reach 1.5 to 2%. This will also drive inflation back to the target. We expect that the growth rate of households' consumption will remain at the current level, while investment growth will notably accelerate. The effect of fiscal measures on the forecast may be clarified after the introduction of amendments to the budget by the government. Regarding external demand, the forecast implies that exports will recover after the last year's decline. However, their dynamics will be contained by moderate global growth rates. In our view, the global economy can be affected by the next phase of trade negotiations, as well as the further development of the coronavirus situation. At the moment, we estimate the influence as temporary. Third, monetary conditions. They have been generally easing. This fully refers to price lending conditions. Yields of federal government bonds stay at their lows for the last 5 years. Interest rates in the deposit and credit market continue to go down. The average interest rate on housing mortgage loans hit its new low in December, dropping to exactly 9% per annum. There is room for further decrease in interest rates owing to the earlier key rate decisions. However, non-price conditions have been changing in diverse manner. In consumer lending, they have been tightening, which is associated with the macroprudential measures implemented by the Bank of Russia. I would like to remind that these are targeted measures we are taking to maintain financial stability in individual segments of the financial market. In this situation, the growth of consumer lending is slowing down, and this trend will continue. At the same time, there is a potential for easing of non-price conditions in the corporate segment. This is already happening at the moment. Areas of lending to corporate borrowers are expanding. Long-term loans are becoming more affordable, including owing to the development of the bond market. This is also driven by the gradual improvement of the loan servicing quality. Fourth, there have been some changes in external conditions, but our opinion regarding their overall impact has generally remained the same. China and the USA have signed a trade agreement. This means that the significant risks we saw in foreign trade have not materialized. This positive news supported market sentiment. Yet new challenges have emerged, and they involve new risks to global economic growth. The coronavirus problem is already affecting the economic situation in both individual countries and the world in general. Speaking of Russia, its influence on our economy is currently estimated as minor. The reaction of the ruble exchange rate to a substantial decline in oil price in January and early February and increased volatility in foreign financial markets was moderate. The country risk premium for Russian assets is currently close to its record lows after its persistent and significant decrease last year. This trend is supported by macroeconomic stability, primarily the accumulated safety cushion in the form of the National Wealth Fund. Finally, regarding inflation risks. First, I would like to remind you what we call risks for inflation or inflation risks. The Bank of Russia's baseline forecast implies a certain path for inflation to return to the target. When we are talking of risks, we mean the reasons that may cause inflation to deviate from the forecast path upwards or downwards. These are pro-inflationary and disinflationary risks, respectively. Currently, disinflationary risks significantly prevail over the short-term horizon. First and foremost, this is how demand is changing in the domestic market, both among consumers and investors. An increase in consumption and investment may be lower than we expect, even in the situation of the continuing easing of monetary conditions and accommodative monetary policy. This scenario is possible if there are no market positive changes in business and consumer sentiment. Another short-term disinflationary risk is a more considerable and longer-term impact of the ruble appreciation last year than it was assumed in our baseline forecast. In addition, there is a range of factors related to both disinflationary and pro-inflationary risks. One of them is food prices, which are very volatile. External conditions are another factor. If the coronavirus situation deteriorates or any complications arise at next stages of the trade negotiations between the USA and China, this can lead to a rise in volatility in financial and commodity markets, a capital outflow, and pressures on emerging market currencies, which are pro-inflationary factors. At the same time, worsening of the situation in the global economy against this background, a decline in external demand for Russia, a slow inflation growth in Russia's trade partners may ultimately become a considerable disinflationary factor. The nature of influence of fiscal policy on inflation will depend on the pace and efficiency of the implementation of the planned measures over the forecast horizon. As before, we can say that unanchored inflation expectations may also be considered pro-inflationary risks. Besides, previous decisions to cut the key rate may have a stronger upward effect on inflation than we estimate in the baseline forecast. Given the above, we currently estimate midterm risks for our inflation forecast as balanced. And to conclude, a few words about the outlook for monetary policy. Given today's key rate decision, we have reached the lower bound of the 6 to 7% range, which we consider neutral for the inflation target around 4%. I would like to emphasize once again that as such the neutral rate of interest is not observed directly. It may be determined only approximately. Besides, it may change in time under the influence of various factors. We have yet to estimate and possibly adjust this range. Objectively, today we still lack sufficient data for this. It will require a longer period of time, maybe even more than a year. But what is important to stress today, when the key rate is at the lower bound of the range that we have estimated, these bounds, both the upper and the lower ones, do not in any way set any thresholds for possible movements of the key rate, whether upwards or downwards. If our estimate of inflation and the economic situation require, the key rate may be set beneath the lower bound of the neutral range. This will mean loose monetary policy. Similarly, when inflation significantly deviated upwards from 4%, we maintained the key rate above the upper bound of this neutral range for a longer period of time. We hold out the prospect of key rate reduction at the upcoming meetings if we consider it necessary to bring inflation back to the target that is close to 4%. Thank you, and I'm ready to answer your questions. Colleagues, please. Let me remind you, do not forget to introduce yourselves and name your publication. Elena, please. Elena Fabricna from Reuters. Do I understand correctly that the estimate of the neutral rate hasn't gone down? 6, 7 is the range that it remains, and if the key rate may go further down, that will start incentivizing the fiscal and monetary policies. Correct. And colleagues, Nastya, please. Interfax Agency. Have you agreed with the government on the new mechanism for coordinating the support for macroeconomic stability? What kind of mechanism is it? On what principle it is based? Will it imply the meeting between the government and the central bank? How often that will take? What kind of time horizon it will cover, or it will be ad hoc? And what makes this mechanism different from the measures which previously were proposed by the former Minister of Economic Development, Maxim Oreshkin? And my second question, the central bank back in 2018 changed the structure of the reserves, having reduced the dollar part in favor of RMB and euros. And then you said that such structure of gold and precious metals and currency reserves corresponds to financial stability. Now taking into account the new risks and coronavirus, do you believe this particular structure to be correspondent to stability purposes? As far as our cooperation with the government is concerned, it is true that we're very substantively discussing two initiatives. I would like to underscore two initiatives. The first one is about macroeconomic stability. We have agreed that we will be communicating more often, trying to verify the information that we have, our assessment of situation. We didn't describe it in the form of the steering group. That will be a mechanism of regular meetings if there would be a need to hold any regular consultations. I mean, specifically for the purpose of us making much more precise decisions, being better informed about what each other does. So this kind of a coordination, in fact, has been existing as such, but maybe it was not so regular when we were discussing another big forecast or a budget draft. So we've agreed simply to turn it into a regular standing mode of interoperability, and I do believe that will be very useful both for the government and ourselves in terms of making our decisions more effective. Now, what regards end, that is not going to take part as any sort of a commission. I mean, what makes us different from the past, particularly in terms of managing the aggregate demand. Personally, I don't understand what is the policy for managing aggregate demand, because there is a monetary policy, there's a fiscal policy. These definitely do affect the aggregate demand, but the aggregate demand is also being influenced by other drivers, without mentioning the external ones. And this is indeed business sentiment as well as household sentiments, investment sentiment, which define, amongst other things, the way the fiscal and monetary policy measures may transform themselves into demand. So this whole aggregation basically shapes up the economic policy. Now, as regards the second initiative, yes, we indeed have agreed to set up a working group which, again, very substantively will be reviewing the issues related to the development of financial instruments, effectively financial market, in order to have the various projects pursued by private investments in order to be conducive to the economic growth. Let me simply quote the example of escrow accounts, because this transition was quite complicated. The government and us, we have been working with the Minister of Construction as well as with the whole cabinet in a very close and continuous effort in order to provide for this complicated, very gradual transition. And so such interaction with an appearance of such complicated instruments is possible, and I do believe that it may apply to expanding project finance activities, which are not very well developed in our case because we've come up with a special regulation with regards to the project finance. And as far as the VEB is concerned, that has to cover other sectors to finance small and medium-sized businesses and certain other project clusters, because these may require changes into legislation, changes into our regulatory base. So this is a very much of an applied kind of initiatives where we, as the central bank, are ready to actively act as mega regulators without any application to the fiscal and monetary policy. These are the two initiatives. Now, as far as the gold and hard currency reserves are concerned, we pursue the policy aimed at having the gold and currency reserves preserved, well diversified, and in our mind, the structure which there used to be, and you know that we share with you the information with a bit of a lag, this structure of the reserves does conform to our intentions. Yes, Tatiana, please. Tatiana Lomska, RBK. Two questions, if I may. The first is about the interest rate policy efficiency. The central bank started reducing the rate in June last year, so more than half a year has gone by. So we see that the response in prices is weak. To what extent it was a surprise to the regulator, and how can you explain such a weak response, and what does it indicate in terms of the efficiency of the central bank's interest rate policy? My second question is about the press release. Why the central bank stopped putting in the public expenditure factor as the uncertainty factor one? Because previously you've always noted it. Nowadays we don't see it as an uncertainty factor. Why? There is some sort of a synergy with the Minister of Finance, or is it not? Or there is any other considerations behind it? Thank you. Thank you. As far as the first question is concerned about the impact of our decisions in the monetary fiscal policy and respectively the way they affect the interest rate and inflation, that does take time. We've always been saying that the fiscal and monetary policy produces an effect with a bit of a lag, and that has always been the case. So we assess the lag in terms of our decision impact like 3 to 6 quarters. You know that these decisions have been all very consistent. Today is the sixth decision, so the effect will be cumulative. We do see that most probably the peak of the effect from the decisions made up to date will fall upon the second half of this year, which is going to be quarters 3 and 4. And that is a quite normal thing of the way the transmission mechanism works, as well as the fiscal and monetary policy. On top of it, certain pro-inflationary factors have been at play, which we may missed out in our forecast, as well as the rate appreciation that we can see now. I mean, disinflationary effect. I mean, the public expenditures in the second half of the year also were a certain uncertainty factor. And overall, considering last year the oil and gas deficit, and it came up to 5.4%, a little bit below the level which we had expected. And in the press release, we do specify that the fiscal factor is one of the factors which will affect inflation, and amongst other things, the decision to invest the liquid part of the welfare fund, as well as the public expenditure schedule, may also affect the 2020, because we act on an assumption that the budgetary spending will be more even this year, but nevertheless the second part of the decisions shall apply to the second half, because we usually have this seasonality, and lack of consistency in terms of the public spending. It's just last year it was more expressed. This year, I'm sure there will be the same kind of seasonality, and a lot of things may depend upon the way the funds are going to be expensed, the ones that were not spent last year, through which period of time that will take, and that is exactly where we need more substantive consultations with the government in order for us to be able to take into account another decision. So this particular dependency remains, and in the press release we also kept it. Yes, Andrei, go ahead. Andrei Birukov, Bloomberg, could you tell us whether it's indicated that the rate may be further reduced multiple times? This statement, if you take a look at when we've quoted it, it means that there is a relatively high probability of the rate being reduced at the next meeting, but it is not guaranteed. Now, whether there may be another reduction depends upon the way we shall assess the economic environment, what kind of data will be available, what will happen to inflation, not only to the current one, but first and foremost, how are we going to specify our economic growth and inflation forecast? Because taking into account the current decisions, we do take into account the current dynamics, but the basic thing for us is the future inflation dynamics forecast, as well as the economic growth. So, depending upon the situation, we will be making up our minds. Yes, colleagues, please, Dmitry. Commerçant. Two questions, if I may. The first one, in press release, it is stated that changes in the fiscal policy socially may not bear any direct influence if the government remains within the fiscal rule framework. Will there be any changes in the fiscal policy which may manifest itself and may affect the inflation stability? And if the fiscal rule remains stable, that would simply be impossible. My second question, it is not being mentioned in the press release. One of your forecast factors is the circulation of the monetary mass. This is estimated value, although it is being affected by psychological attitude and the technological ones, how strong these changes are in the business, and because that may affect and reduce the precision of your forecast. To what extent do you believe this is a problem, and can anything be done about it in the short-term outlook, or do you believe that it is not really important? Thank you very much for your question. Yes, indeed, we do believe that pro-inflationary risks linked to additional budgetary spending to execute a set of measures for social, demographic and investment activities. Effectively, the pro-inflationary effect from those is limited in many ways thanks to the fact that the government, as we understand, and that's what we're based upon, is going to act within the fiscal rule framework. Now, if there aren't going to be any changes in the fiscal policy further on, but everything is going to remain within the fiscal rule, then pro-inflationary risks are going to be quite restricted. I can theorize and say that if all of a sudden they may happen, a certain unevenness in terms of the regularity of the fiscal spending in the course of the year, which may produce temporary inflation hikes and heat up inflationary expectations and produce certain secondary effects. These are temporary things, but overall, in terms of pro-inflationary risks, that is what we don't see. Now, in as far as introducing technology, information, the speed of circulation, and as most importantly, reducing the transactional costs in the economy, because thanks to these ones, we are seeing how it goes down. That is a positive thing for the economic growth. So if we are to talk about the way it's affect macroeconomics, that may produce a positive effect. Currently, in terms of any direct accounting of it in our macroeconomic forecast, we don't really take it, because compared to other factors which do influence certain indicators, in the meantime, this is, of course, not a significant factor. And there is a bit of a complication, that everywhere in the world, how one should measure the effect of digital, quite often invisible effects coming from new technologies like GDP, as well as the quality of life and income. This is the kind of a problem problem that not only we face, and hardly likely the central bank will be able to resolve it of its own volition, and that may affect the ultimate precision of the way we assess the situation and the future development. It may shorten the ability to assess positive effects from the new technologies. I believe that it is always the case with new technologies, this inability to assess it in its full entirety, but it's really difficult because a great public effect comes from it. That in the income of individual companies it may not be fully reflected. So it is a very important topic, but undoubtedly we're going to work on it, and our team of researchers are going to be scrupulously monitoring it, because this is a potential factor which should be taken into account, definitely. Gulnara, please. Gulnara Vahitova from RIA Novosti. In the press release, you mentioned certain uncertainty factors in terms of the inflation, but nevertheless, the central bank practically hasn't changed its midterm outlook. Do I understand correctly that the central bank believes this a temporary phenomenon without expecting it to turn into a new black swan for the economy? And my question is about the ruble appreciation, ruble exchange rate. You said that the additional factor in inflation was the ruble appreciation, and now the ruble is depreciating. So what is the reason behind it? Could you explain? And when the effect upon inflation from the exchange rate is going to be exhausted within 2020? Thank you. As far as coronavirus is concerned, we believe this to be a risk for our base forecast, and that's what we are mentioning. However, to estimate its effect is impossible just yet because there are too many uncertainties. It will all depend upon the speed, let me put it this way, upon the longevity of the epidemic outbreak. But at this point in time, our assessment of this effect is that of an insignificant one, and we will assess it alongside with other factors of uncertainty that there are. You mentioned the exactly black swan. You may describe it as a black swan, but the black swans, our task is to have the financial and macroeconomic stability to be supported. So improving sustainability and setting up the buffers, the safety cushions, in many ways, props up the economic stability as opposed to such black swans. So macroeconomic stability is needed in order for the economics and the household economic levels to be less vulnerable to such unpleasant and abrupt things. Now, with regard to the exchange rate and inflation, well, first of all, the exchange rate effect upon inflation as such will never be exhausted because the currency channel will remain, because there is a movement of an exchange rate, and these effects juxtapose one upon another, so it is very difficult to distinguish it, because last year we had an appreciation, this year we have a bit of a depreciation, so they're quite extensive in time. And actually last year we still felt in the disinflationary part of everything the appreciation effects, but part of this disinflationary effect shall continue this year. We feel about 0.2% percentage point we expect from the appreciation which took place last year, but that is just an estimation. As far as depreciation of the exchange rate is concerned, we will need to monitor further dynamics, and by way of it being a factor, we shall definitely assess it. And yes, and then answering your question whether the effect of appreciation will exhaust itself, I said 0.2, but the effect itself will get exhausted sometime by mid-year. Through the first half of the year, the inflation indicators will reflect the effect of the appreciation which occurred last year. Colleagues, just 1 minute, because we are receiving questions from our regional correspondents. Artyom Kuznetsov, Politsibru magazine from the city of Brno, from the region of Altai, is asking how the key rate reduction may affect the household consumption and mortgage policy. Can we hope for minimum rates in mortgage lending this year? And how the central bank key rate influences investments? What will happen with investments this year? Well, without doubt, reducing this rate, and first of all, reducing inflation, specifically this factor, do affect the lending rates reduction. And this is what we see as the effect, because the consumer lending rates follow suit. The mortgage rates reached their historic minimum, 9%. This is not yet the end of it, we believe. There will be a further reduction of mortgage rates. Therefore, this expands the opportunities for lending, both for households and businesses. And in itself, the reduction of rates makes them more available to lend to investment activity, primarily through the fact that low inflation extends the planning horizon and principally makes the loans longer in terms of nature. That is what is required for investments. And we base ourselves upon the expectation that investments in 2020 will speed up. Vedomosti newspaper Elvira Nabiullina would like to add on to my colleague's question about the social spending. Currently, the government is preparing amendments into the budget which should take into account future spending proposed by Vladimir Putin, which are targeting social support. And as you're saying that the inflation measures are not going to be affected by any risks, what would you say? What are the possible sources of funding for these measures, which you believe could bring about inflationary risks back on our radar screens? So what is the source of measures to fund these measures you believe is to be the riskiest one and the least desirable? Well, the most pro-inflationary ones will be the measures which will be related to changing the fiscal rule. But to the extent we understand, these measures are going to be funded specifically within the fiscal rule. Yes, Anastasia, please. Have you yet made up your mind about the mechanism to link your currency acquisition mechanism within the fiscal rule together with the rules applying to investments from the welfare fund, and when are they going to start after the threshold is exceeded, 7%, at which point in time? Second question, January 1st was when the amendments into the budget code came into effect, which remain only one type of guarantee, the revocable one. Do you see any risks of the reserves of the major banks to grow? The ones which were using the government guarantees, are going to apply any measures or offer them any easing? And my third question, haven't you continued to debate already with the new cabinet possible divestiture from this bank equity, and maybe whether the disappearance of certain ministers from the old government, this question ended up being in some sort of a limbo? As far as linking our currency acquisitions with using funds from the National Welfare Fund, we are in a close contact with the Minister of Finance. We continue to discuss this mechanism, and it seems to me that I mentioned it before, but I shall repeat it. Definitely, this is something that we will announce, but after the mechanism itself is reflected in the legislation. Once it is written into it, we will make an announcement of what kind of mechanism it will be. I can assure you that we are interested to make it transparent to the market so that this mechanism will have a least influence over the financial market dynamics. Now, when the spending may start, I suppose, close to the middle of this year, hardly likely before. This is something that you need to ask the Minister of Finance. As far as the guarantees are concerned, indeed, with the introduction of changes into the budget code, the guarantee cease to be the kind of an instrument whereby we are ready to accept the fact that reserves are not being established, because the guarantee, when it can be revoked throughout a large circle of circumstances, doesn't make it possible to simply automatically maintain zero reserves. In this case, the banks must assess the creditworthiness of a borrower as should be, and depending upon the quality of this borrower, to set up the reserves. If these budget guarantees will be revocable in this sense, in the interest of the banks, and actually the banks understand that they need to manage risk, because this is not simply just to demonstrate lower reserves level to supervisory authority. This is something that requires a true understanding that a loan is being revoked or it is being covered by somebody. So these institutional guarantees exist specifically for the purpose of understanding that a third party takes on this obligation or guarantee if the loan is not being paid. If such obligation disappears, we certainly won't be able to take full account of it in the guarantees, like the case has been used up till now. And as far as these bank equity negotiations is concerned, they're not yet over. This is still underway. Colleagues, please, Evgenia. Thank you. Bloomberg Agency, Evgenia Pismenaya. I've got two questions about the trends, which may be modern in the world, but haven't yet affected Russia that much. So it is interesting for me to hear your view as the most progressive professional institution in Russia. The world of investment is altering, and the biggest foreign investors these days invest into companies with high responsible and sustainable investing rating. Now, there aren't Russian companies with such a rating, as we know, and in our fuel-dependent economy, it is difficult to observe this. Don't you believe this to be a risk? I mean, for the financial market in Russia. That is my first question. And my second question about the climate. The biggest central banks of the world started paying attention to climate change, to the climate change risks. And these risks do pose a long-term threat to the global economy, including the threat to financial stability. Are you observing in any way the climate change risks? Or are you planning to include it in the financial regulation of the companies or somehow into your fiscal and monetary policy? Thank you. It is indeed an important question. Both of them, because requirement placed upon investment activities cease to be simply being able to demonstrate a certain capital yield, and then different requirements are being imposed upon it. Something that you're talking about is the kind of trend which definitely will grow. We are aware of it. And the Russian market, being part of the global market, in the same token, will be gradually adjusting itself to these requirements and maybe even coming up with some of its own. And as far as the green investment is concerned, this is the topic which is in the focus of our attention. We started working on it. One shouldn't say that nothing is being done about it in Russia. We do have cases of green bonds being issued, but it is quite underdeveloped, right? And here we're talking not only about funding the projects which are specifically related to the green funding, but being in a position to fully take into account the risk related to the climate change, not only in insurance, but also in banking, in lending, and in other areas. And we are purposefully looking right now at how these risks can be identified, how can we take it into account based on the international experience. This is indeed one of the priorities, and I should say that that will manifest itself in some new approaches, which we are going to discuss with the market, definitely, and possibly in some changes in the regulation. This is a very important topic. I absolutely agree with you. There aren't any immediate risks of this sort right now. You asked about whether there are any risks to the Russian financial market. No immediate risks that we do identify, but this is the problem of the future development of the financial markets, which we definitely should take into account. Yes, colleagues, Masha, go ahead. Task information agency, Maria Stepanova, I wanted to ask you to be more specific about your working group with the government. Is it known already who will be part of it and when the first meeting is going to take place? We are currently working on it, trying to put together our ideas about who should be sitting on it, so this is currently in process. And another question from a regional media. Tatiana Yermolenko from the Vladivostok newspaper from the city of Vladivostok is asking, one of the most sought-after banking products amongst Russians deposits. This kind of saving is popular amongst all ages. So if the deposit reduces, the result in terms of their yield reduces, as a result of the key rate reduction, wouldn't it end up having people withdraw all of their money and invest their rubles into foreign currency? Well, indeed, when the rates go down, they also go down in deposit and lending. Sometimes we are not mindful of it. The deposit rates go down, yes, but nevertheless, they remain positive for the deposits. And we do see that the ruble deposits of the household last year grew by 10%. That is to say that the savings in the banks do remain attractive for the households. But nevertheless, we also ascertain a higher level of activity on the part of the household in terms of their demand for other financial instruments, because some people want to achieve a bigger yield and they go out into the open market. This year, we've had a record inflow of retail investors in the stock market, and people make their choice because deposits is an insured financial instrument that is covered by insurance, where there is a bigger yield. Quite often there is no insurance, and people have to make up their mind, and we believe in a very conscientious way. And that is why we are trying to work on the draft law about the qualified and non-qualified investors, so that the household interests, once they are more active in trying to go out into the financial markets, and their interest towards other instruments apart from the banking deposits at the same time could be well protected. Colleagues, are there any more questions? I must tell you that our time is coming up, so let's have the last one. Andrei, go ahead. May I ask a question about oil? What kind of the behavior of oil prices do you put into your forecasts? Have you calculated the future of the OPEC agreement? Do you believe it would be more positive or negative? Well, you know, the oil market and this agreement regularly are getting extended, and its terms may change, and we understand that this uncertainty factor, with regard to this agreement, do remain. So in our forecast, we try to act conservatively. Therefore, we haven't changed our outlook for the oil price currently. Actually, the current oil price is quite close to what we are seeing right now. Now, once the terms of the future agreement are known, whether it is going to be extended or not, in which form and shape, only then we'll be able to take into account how that may affect our forecasting. I mean, the systemic approach is to be conservative and to take into account the effects once we learn about them. Dear colleagues, thank you very much. Thank you.